Hey everyone, welcome back. Thank you for taking the time to join me on this daily GameStop review. It was a rough one, negative 2% on the day with a bearish signal setting on Rory Kittinger's 4-hour chart. We see our 21 cross under the 50 and pairing that with a key level breakdown on our price where that has broken now below the 100 simple moving average as we see here on the top chart. RSI bottoming down there as well, so that could be a false break and a turnaround. This is very plausible in a low liquidity environment. GameStop volume is well below where we'd like it to be. On that note as well, on the 4-hour chart, we have our PMO reversing in a bearish nature as well, which is unfortunate. However, this is the reality of things. We're going to have more technical analysis to close out today's video. Just wanted to get that out of the way, right? Negative 2%. Things are flipping to be a little bit bearish. This is tracking with the overall market, which is to be expected. No worries here. And at the end of the day, we have just had such an extended run that we can't go on forever. We do need to reset momentum for the next leg up, right? And that's where we're going to close out today's video when we wrap back to our technical analysis. With that being said, we are still above max pain, which is nice, not by much. A few days left in the week. Next Friday will be our ex-dividend date. So all eyes on GameStop currently. Getting into it quickly here. I don't want to spend too much time. There wasn't really much to track. A lot of action on the 27 5s, 27s, and 28s on the week. I assume that these were sold, but every seller has a buyer, of course, as well. And they would have been great sells here. Like if these were covered calls, honestly, you nailed it. You can close these out tomorrow or leave them till the end of the week because I don't think we're going to trend upwards with that bearish signal just setting, right? So, maybe that's just a sign of the times, right? With that being said, overall open interest is still here, right? And there's so much at 30 that we can almost guarantee that we're not going to end the week there. And with our recent price development, it makes me nervous because we got so many 27s as well. So I don't want to see these get burnt on the week. I'd love to see these in the money, and that's going to roll a lot of pressure through that settlement into next week, which is a big week for us. We'd really appreciate that. Bottom line, I'm pretty positive these 26s are going to be in the money, which womp, womp, womp. It's not much, but it's better than nothing, right? So that is that magnet, 25 to 26. 30 is going to remain the lid, and a firm push to 29 is obviously going to put 30 in play. And, there is so much open interest at 30 across all of the expirations that if there were something to happen, now we're looking at a gamma ramp. And the last time we had a ramp that was similar to this, there was some unknown catalyst, some tweet or something happened. I don't know. And the ramp ended at 35. We went to 80, right? So we don't necessarily need the ramp to go the entire way. What we need is to be in play and then something to push us off the ramp into that nice little jump or liftoff. October 3rd, the big day, max pain 25 call walls, 30, 28, 26, right? Some 22 puts here, and 25 is kind of loading up, 26 today. Nothing too unusual here. 27 acting as our shelf, rallies likely stall beneath 30, again, unless there is a catalyst. Or call demand increases, right? That could always happen as well. That hedging could be real time based on options flow instead of a catalyst which makes them play catch up, right? Into the 10th, a wider band, 22, 25, with that big 30 cap up top. Lower volume overall on this week, but it's building, it's here, and it continues. A lot of 27s and 30s today. Well, a few of them, I suppose. The 17th, this is our monthly OPEX. Just so many at 30, so many at 25, and good bridge between there. Even extending past that 35.40, and then y'all are crazy out here. But lottos be lottos. Like, what are those worth? The 60s, $18 per lotto. Which, I mean, you're obviously burning $20 as soon as you buy that. But what's a $20 lotto? I don't recommend that at all. Just buy your contracts in the money always. And big monthly battleground here. Sustained hold above 29 could really flip positioning quickly long term, because I also noticed some super long term leaps that are a little bit out of the money, which is interesting at 35. Which, by golly, if that became our new floor, I would not be upset, because we've seen those 20 leaps previously acting as a big support for us on our floor. October 24th, getting spooky ooky almost. And, default magnets can be 24, 26 unless 30 breaks again. There's not much happening here, right? It's a pretty light week. 23 puts are less than ideal, right? We don't really like those. And then the big day, Halloween, bears beware, right? Still, it's pretty light, right? There's not much here, but I imagine post October 3rd, when the new options chain is released, then we're going to see a lot of these other expiries fill out in a hurry, right? But for now, they look pretty light. There's a lot of 30s here today, a lot of 40s here today as well, but not a lot. Like, 700 and 400. Obviously not blocks of 5,000, right? Similarly, a little bit heavier, 25s, 30s on November. Again, this is so far out that we don't really need to pay too much attention to it. However, I think after next week, it's really going to fill in. And just to note and show everyone how many 30s there are here across multiple expiries. And, if something happens and we get pushed through that, the amount of hedging that will need to take place by the market makers on these 30s, which is not taking place right now, is going to be ungodly. So one can hope, right? All of it is set up. We just need someone to knock it down for us. And then the leaps, this is the same as it ever was, and people still loading up on these, which is nice to see. Some 30s, right? And there's a buttload of 20s, 25s, and 30s here, and an ever increasing amount of 35s, 40s, and 50s, which is crazy. Y'all got to stop. And these 125, there's a $35 each. Do not buy these. In my opinion, that's not great. Only ever buy lottos like this with profits. So if you pulled out a bunch, you can give back 1%, right? Other than that, don't even pay attention to them, right? One thing we could pay attention to is I seen a bunch of 35s somewhere, a bunch of 25s as well, right? So even these further dated in the money contracts are still being loaded up. Oh, here it is. Look at this. The 2027 Jans, the number of 35s here is crazy. That is a lot. 50,000 35s for January 2027. Ooh wee. I like those. So, we've got all these 30s now. Let's say we get some form of catalyst to push us through, and now we've got a massive floor at 35 that everyone can collect around. I don't know. I hate to be optimistic, but dang, dude. Yeah, so there's a lot of long-dated upside here. People have an appetite for it. We're going to have to wait and see how that pans out. Shares available to borrows remaining the same. Borrow rate is up a little bit here, and utilization is flat as well. Borrow rate actually dropping on interactive brokers. However, we see shares available to borrow bleeding off a little bit as well. which is nice to see. So maybe the start of something, but we want to see that borrow rate just skyrocket, please and thank you. IV is down again, basically just tracking with the price, 6th percentile, 46.9%. Like, things couldn't be cheaper. Again, I predict that the IV jacks up as soon as, well, it wouldn't be the 4th because the weekend, the 7th or something, the 6th, what would it be? Yeah, the 6th. I think IV is going to start going up post ex dividend date, and we're going to have to wait and see, though, right? So that's that. We also see Regional Formal doing a bond pricing PMO comparison if you want, which is timely considering that we're discussing it today. I actually had that on the menu before I seen this. They're talking about it being a bullish factor and how the price should run up to 32 based on the previous sets of this indicator, right? So I know a lot of people really love their blue boxes. They got me in trouble once with Bobby, but I'm sure I wasn't the only one there. However, bringing information to the community is amazing, right? So that is what it is. But with that note, on the 4-hour, we are reversing. Now the momentum in here is going to turn back on us a little bit. How far back we trend is going to really determine a lot of that. So with that being said, we can kind of zoom out here a little bit to the 1-day, and things are still looking good, right? So looking at the different time frames is important, because even though the 4-hour just reversed bearish, the 1-day time frame is still quite bullish, right? So the 4-hour can reverse bearish, but then reverse bullish, all while still respecting the bullish 1-day structure, which, again, we have our reversal here. We have a key level breakout with that pairing, which was previously rejected. And now we just want, again, to see a trend retest. So the price, can come down to any one of these moving averages as far as I'm concerned. We also have the lower band of the 1-day gap here. Okay, so a retracement, totally acceptable as far as I'm concerned. Our RSI, coming back in to acceptable levels. And I think I mentioned this yesterday maybe, is we have a double pop out and in here before displacement upwards, which I would really like to see repeat, obviously. Who wouldn't? And so last time that happened, we had, the kitty catalyst, if you will. This time a corporate catalyst, right? So it is curious. We're going to have to wait and see on that. The volume is here. It's not really fading off too much, right? There isn't a lot of volume in general, and the price is going to fluctuate more on bad structure with low volume in comparison to higher volume, right? Where it's not less volatile, but less whippy, if you will, like plus 2%, minus 2%, right? A little bit more sporadic, whereas the high volume is going to be, whether it's plus or minus, 5, 10%, multiple days in one way, whether, it is up or down, rather than the flip-flop, right? So, the kitty indicators are chilling. We talked about this yesterday a lot. What I also noticed was, so if we line up GameStop with the general market pre-bond, because we're talking about Regional Formal's warrant price based on the PMO on the 1-day, right? Well, we also have the warrant strike price still being at a discount in comparison to where the general market is based on GameStop, right? So if we line the two up To start, we see the SPY is way up here at plus 10%. The warrant's up plus 5.6, and we've got GameStop at minus 13, right? So a lot of room to the upside there still. However, that story changes as we zoom out more because pre-bonds, I think I might have called these warrants a moment ago, but pre-bonds, GameStop was trending way above the market, right? So this is going to depend at where we're starting all of this and our zoom of it. So that being said, maybe we're already right where we need to be. So that argument can be unfolded immediately, and a lot of technical analysis can do that if you look for it. And I'm always looking to explore both sides of that, playing devil's advocate always, a serial contrarian. But with that being said, we try to play with that more and seeing the differences. A lot of the time, it does track above. Some of the time, it tracks below, right? So just kind of trying to get a feel of that as to where it is in comparison, and also where GameStop is. So is GameStop overvalued in comparison to the SPY based on its bottom trend line, right? Or is it undervalued in comparison to the SPY based off its bottom trend line? And then you can kind of see that, right? And you get an interesting story there, which kind of shows that GameStop is doing pretty well for itself, at least competing with the market off of its bottom trend line. Off of the top trend line of GameStop, off of its peaks, it's currently way undervalued, right? So, where you were is relevant, as relevant as where you are, right? So, rambling too much here. There's not really much to talk about. So, we can look at my charts and get a little bit better of an idea. Let's just save those. Jump back over to GameStop. Oh, is he day trading? Don't tell anyone. Don't tell anyone. I'll get out of here. Don't even look at that. Don't even look at that. And so things trending downwards today, not great. Holding, again, that consequent encroachment, which is fine. Let's get the 1 day and the 4 hour out here. And, as far as I'm concerned, this still looks really good. As long as this bullish order block is respected, that's fine, right? We can come back, bounce off of it, and go. I'd be more than happy with that. It's if we shred through it, invalidate it, retest it, and then break down further, that would be really, really bad and something that we'd like to avoid if possible. And I think we will, honestly, because the options chain looks good. Again, there's that upcoming corporate catalyst, which is nice. And so basically, and then, okay, so the volume. Current day volume is 5.5 million. Our 30-day average is 9 million, right? So I don't put too much cadence in the price movement on a low volume day, right? It's irrelevant as far as I'm concerned. It's a beep, it's a boop. It's much better to pay attention to the price of GameStop anyways during those high volume periods, right? Where we can see the average increase. And, we're trending below average. I'd like to see it 20 million. I'd like to see 50 million, and then ideally 100 million, and then let's string a bunch of those days together, right? So things are still chilling, looking to fill the upper band. I expected to get it midweek here and then retrace back. We don't get it, and we're retracing back, unfortunately. Again, that's subject to change. All it takes is some volume, and here we go. However, on continued low volume days, we're going to consolidate at best to retest our EMAs here, right? So it's the same thing I look for always, our reversal signal, key level breakout, retest, and go. Nothing new here. We can see it right here. So here's our reversal, trend, retest, and go. But I guess you want a key level breakout, which came early. When's the last time GameStop had one of these? Don't say it. Don't say it. Well, here's our reversal signal. Here's our key level breakout. Here's our trend retest, right? And then it goes. That's the setup that I play every single day when I trade, and it works out quite well for me. So lots of room for it to retrace, and I'm still comfortable with the trade, I guess is what I'm meaning to say. It's if it breaks through these EMAs and can't immediately reclaim them, that we really need to step back and say, okay, what has gone wrong here for us? However, still holding on. A lot of my option contracts are chilling still. Haven't really bled any of them off, waiting for the upper band to fill. Worst case scenario, the third comes and goes, and we need to roll them out further. That'll be fine. So with that being said, if there's anything I can do to help, please let me know. I know today's a little rambly. It happens, and it's going to continue to happen. I'm a pretty rambly guy, but it's my pleasure, and I hope you enjoyed, and I'm looking forward to seeing you soon in the next. All right? So take care of yourselves, and until next time.